Hi, and welcome again to another edition of Market Analysis for today, February 24th of 2025. I'm Gio Benacourt, and this is a recording right about half an hour prior to the U.S. session open today. All right, so let's get right with it. Stock investors turned gloomy on Friday, shifting into a risk-off mode that ended with the S&P 500 having its worst day of the year. Some weak economic surveys and disappointing guidance from retailer Walmart raised worries about the outlook. All of this took the indices to finally break out of balance areas of multiple degrees. We should see lower prices, but how much lower cannot be determined at the moment. We can know that Friday's highs in the respective indices are the level that cannot be broken under any bearish assumption. Retracement of some degree into today's range is certainly a possibility, but trying to guess how deeply is just that, a guess. It is also possible to see another wide range down day to put in a short-term capitulation type low. Market internals have plenty of downside room before they get to anything resembling extreme readings. Now, there will be a lot to watch, more to talk about this week. One highlight will be the personal consumption expenditures price index, the Federal Reserve's preferred inflation gauge, which is published on Friday. Traders are already bringing forward expectations for the next interest rate cut, albeit only slightly, to see a quarter point drop in the first half of the year instead of the second. Bond yields are also lower, and we also have Nvidia, the semiconductor giant that single-handedly accounted for the 20% of the S&P's gain last year, is going to be reporting on Wednesday. Now, to be fair, Friday's mini slump on the market could be a blip. Of course, shares are richly valued, but that doesn't mean they can't still go higher. So with that being said, as we look at the Nasdaq, we see that on that big dip on Friday, we have open gap up. Okay, not that much of a big gap up, but it's a gap up. So therefore, let's use some values that we can identify easily. Basically, psychological numbers. I'm going to use the first resistance level as the 20-day moving average is sitting there. So that's going to be our first level of resistance. So let's see if this momentum will continue as the RSI creeps above 50, the 50 marker. That'll imply momentum to the upside. Now, again, this could also turn around and just drop. If we do happen to break or close below 21,500 today, we could expect a continuation to the downside tomorrow. S&P 500 on its other hand, so also big dip, also a nice gap up. Let's use the lower Bollinger Band as a probable level of support, and 6,000 psychological round number support for the S&P. The 20-day moving average is right there, and let's use 6120 as basically a number psychological value. This basically because of that. So let's see what will happen today. Then we have the Dow. Let's look at the Dow. The Dow is also its gap up is not as profound as the S&Ps or the Nasdaq, but however it is a gap up. So let's just use 43,400 as our first level of support and 43,200 as our second. Then we're going to be using the up and Bollinger Band has already been met. So let's just use that again. Right now, you know what? Let's give it 43,850, just because then we have another second level, which is that swing low from Thursday. Let's see if those two levels will suffice for support. It might not be. Then we have crude oil, also tanked on Friday. This crude oil gap up and gap down, because it's open. This one opens up right below here. So it open gap down. Will that mean that we're going to be having a continuation move to the downside? Perhaps, because it did open with a gap down. It has been closed. So let's see if $70 will be that psychological round number value where we find support if we happen to retrace to that level. Okay, but overall, I think my speculation is sideways movement for that. Okay, so Nat Gas has a more deeper and more profound gap down. So I am going to speculate that $4 is going to be a psychological round number for it to come find that support. I'm going to use the 20-day moving average as our second level of support. The upper boundary band as a probable level of support, and I'm going to use Friday's swing low as our second level of support. But the second level of resistance, I beg your pardon. So the consensus of what I'm looking at is that this will most likely will come down towards the $4 and see if it finds that support at $4. So initially, short term, short selling. Gold. So let's take a look at gold. Gold has been on a rally. Okay, it has done obviously its corrections, and it's fair for gold to do that. Now 3,000, it seems to be getting closer to us. We're basically so far as the reading. Come on now, chart. Don't lag on me. It's lagging. It's not loading as how fast we want it to load. Come on now. It's not loading. And okay, there it goes. Let's see, there it goes. Okay, cool. It finally load. All right, so 3,000 is gonna be our target for the week. Let's see if that will be the case. I mean, 29.65. Again, these levels are I'm just randomly grounding them because we are in new territory, so therefore that's how. I mean, if you wanted to, we have been flattish in range, and the breakout, it happened. I was talking about that breakout in several assets that have been doing the same, basically fluctuation, staying within range. So if it fluctuated, it broke to the upside. So now we are basically, we've done a new all-time high today. So 3,000 is just right around the corner. Hey, by Friday, 3,000. I was saying 3,000 by end of March, but this looks like it's gonna happen this week. I could be wrong. But hey, we are here to speculate. So silver, 32 and 20. Being bullish also on silver, so I'm still gonna leave the same levels that we have from last week as resistance. So looking to buy also, even though it opened with a gap down but has been closed. So let's keep that in mind. Copper is always a good scenario here. Copper fluctuating to the downside for the last week. On Friday, that dip. So today we're looking at basically, perhaps we're gonna be doing another sideways trading right above 450. I think that's what's gonna happen on copper. I think we're just gonna keep this range that we are so far and just be doing something like this. So sideways trading for copper consolidation, perhaps. Bitcoin again fluctuating below 98,000 after last week, peep above towards the 99,000, but it closed below. So let's lower our level of support to the 50-day moving average as our first level, and 93,000 psychological round number or somewhere around here. Then we have the let's just use the 20-day moving averages again for today because it is being tested, and the upper boundary band as our second level of resistance. But I'm speculating that it's gonna fluctuate around 96,000 just as a pivot point. It's gonna be around there also sideways trading. The currencies, the euro early in the session, in New York session, it fluctuated to the upside strongly towards the 105 marker, but it quickly retreated and is trading lower. It did open gap up strongly. Now it's looking, it tried to close it. Is it now also in recovery mode? But what I anticipate is that this range is where it is going to stay for a couple of days. So lots of sideways movement. Then we have the pound whenever it loads. Here it goes, here it comes. It's slowly loading, here it goes, it's loaded. All right, so the pound. Also, let's see if those same levels of resistance and support, even though we did fluctuate and violated them today, but we really haven't closed above it. So we are below that. So let's see if you'll be able to stay above 126 for today. And that things will happen as the dollar index had a nice little fluctuation to the downside, but it's recovering now and now it's in the green. So will this imply that momentum to the upside is going to pick up and have the dollar index rally to the upside towards the 107 marker? That could be the case. Okay, you have the 50-day moving average right below it, so let's keep that in mind. It is it for today. Have a great trading day, and I'll see you tomorrow.